Let me ask you something uncomfortable. How many times have you heard the phrase, compound interest is powerful, and then continued living exactly the same way? You know it. I know it. Everyone online knows it. Yet most people still keep chasing shortcuts, hoping for a magical crypto pump, a miracle stock tip, some overnight passive income hack, or a dream business that drops money like confetti the moment they start. And deep inside, you probably ask yourself, if compounding is so powerful, why am I not rich yet? The real answer is simple, because you've never seen what compounding actually does in real life. By the end of this video, you will not just understand compounding, you'll feel it. You'll feel the weight of every year you waste, the potential of every dollar you delay. If success is your goal and you're ready to level up, make sure you subscribe. Every video is crafted to move you closer to the life you deserve. Let's begin the journey. And trust me, the deeper we go, the more shocking it gets. Number 1. Compounding is not about money, it's about behavior. Imagine someone who is constantly waiting for the right time. They think, once I earn more, I'll invest. But every raise comes with lifestyle upgrades. Every bonus disappears on online shopping. Every increment turns into a new phone or a weekend trip, and they continue assuming they're still not ready. Meanwhile, someone else sets up a simple automatic investment into an index fund, maybe just $50 a month, and forgets about it. 10 years later, the second person is shocked by the wealth growing in their stock portfolio, and the first person is shocked that nothing has changed in their bank account. This is the difference between believing compounding works and living like compounding works. The core behavior behind compounding is boring consistency. Wealthy people are masters at embracing boredom. They know that the secret to financial freedom is not dramatic decisions, but small, daily, invisible ones that no one claps for. They automate their investments. They reinvest their dividends. They allow growth stocks, index funds, and ETFs to quietly compound without checking their brokerage account every 48 hours. They treat time like the real currency. When a bear market arrives, they don't panic. When volatility shows up, they stay invested. When the news screams fear, they double down on discipline. And all of this reveals one truth. Compounding doesn't reward intelligence. It rewards temperament. Number 2, time is your richest asset, but most people treat it like a discount coupon. Anyone can save money, but only those who respect time become wealthy. The tragedy is that time is the only asset we all get equally, yet people treat it like it's infinite. If you delay investing by 10 years, you don't lose 10 years of growth. You lose the exponential curve that would have started building during those 10 years. Wealthy people don't see time as minutes or hours. They see time as a multiplier. Every year you invest early is worth several years later. And the weird, almost unfair thing about compounding is that your earliest dollars are your strongest soldiers. They grow for the longest period. They survive the most bull markets. They recover from the most market corrections. They experience the most dividend reinvestments. They enjoy multiple cycles of stock market appreciation. The dollars you invest at age 20 can become little financial warriors. The dollars you invest at age 50 are almost late to the battle. But here comes the painful part. Most people waste their 20s trying to look rich. They waste their 30s trying to recover from their 20s. And they waste their 40s believing it's too late. The entire time, compounding was available to them, waiting quietly, patiently, offering the most generous return in the world for anyone who simply starts early. Later in this video, we're going to discuss exactly how early is early enough and what to do if you feel like you've already started late. Trust me, there is a powerful twist coming. Number 3, small amounts feel useless until they don't. One of the biggest mindset barriers everyone experiences in wealth building is the feeling that small amounts don't matter. What difference will $10 make? How can $20 change anything? I'll invest properly when I have real money. And that belief is the number one reason most people never experience compounding. They think compounding rewards big numbers, but the truth is, compounding rewards starting numbers. Small amounts look useless in the beginning, but they become unstoppable near the end. Compounding works exactly like a snowball rolling down a mountain. For the first few minutes, it looks ridiculously tiny. Then it picks up speed, then mass, then momentum. And suddenly, it becomes so powerful that nothing can stop it. Wealth works the same way. Small amounts don't grow because they're small. They grow because you gave them time and consistency. The amount doesn't matter. The rhythm matters. The repetition matters. The discipline matters. Your investment account doesn't need intensity. It needs reliability. Number 4, your habits compound faster than your money. People think compounding is a financial phenomenon, but the truth is far bigger. Compounding applies to your decisions, your routines, your discipline, and even your self-image. Your financial life is built on the compounding of small behaviors. And here's the twist. Your habits compound much faster than your investments. Think about this. A person who saves when they earn little will save even more when they earn a lot. A person who invests consistently when they have limited income becomes unstoppable when they get a raise. But someone who struggles to save at low income won't magically become financially disciplined at high income. Their habits scale with their earnings, but so do their problems. Here's the identity shift wealthy people follow. Consistency beats intensity. They don't aim for perfect habits. They aim for compounding habits. Investing once for a big amount does not build wealth. Investing every month for years builds wealth. Reading one finance book does not change your life. Reading every day for 10 minutes compounds into thousands of insights. Going to the gym once does nothing. Going 3 times a week for 10 years transforms your health. Wealth works the same way. Number 5. Compounding requires emotional control, not math skills. Most people don't fail at compounding because they don't understand percentages. They fail because they can't handle boredom, fear, impatience, market volatility, social pressure, and the discomfort of delayed gratification. Compounding is a psychological game disguised as a mathematical one. Here's the emotional trap. In the beginning, compounding looks painfully slow. You invest every month, you sacrifice, you discipline yourself, and the numbers barely move. This is where most people quit. They want dopamine, not discipline. They want excitement, not patience. They want instant reward, not consistent returns. But wealthy people understand something most people don't. Compounding is slow until it's suddenly fast. In the beginning, it feels like nothing is happening. In the middle, it feels like maybe something is happening. Near the end, it feels like everything is happening at once. That sudden explosion of growth is what everyone wants, but almost no one waits long enough to experience. Now let's break open the biggest mistake people make about compounding, and the part that could cost them millions over their lifetime. Number 6. Interrupting compounding is more expensive than never starting. People worry about how much they invest. They worry about what stock to pick. They worry about whether to choose ETFs, index funds, bonds, REITs, or high-dividend stocks. But the biggest financial loss comes from one thing: interrupting compounding. Compounding is like flying a plane. Most of the fuel is used during takeoff. Once the plane reaches cruising altitude, it needs far less energy to maintain speed. Your investments work the same way. The early years require discipline. Once compounding picks up momentum, the growth becomes automatic. But most people do the worst possible thing. They interrupt compounding right during the takeoff phase. Interrupting compounding is not just a mistake. It's a wealth killer. Number 7. Compounding works only if you let your future self benefit from it. Here's a bittersweet truth. Compounding doesn't reward people who want quick results. It rewards people who think in decades, not days. To truly unlock the power of compounding, you have to care about your future self more than your present self. The reason many people never build wealth isn't lack of knowledge. It's lack of patience. They underestimate what they can build in 10 years and overestimate what they can build in 1. They get distracted by shiny objects. But your future self is silently begging for discipline today. Compounding rewards those who begin before they feel ready and stay longer than they feel comfortable. And the moment you understand that time is your greatest asset, consistency is your greatest tool, and automation is your greatest weapon, everything changes. In every video, I try to discuss and address the factors that surely improve the chances of your success. If you like this also, subscribe the channel, like and share the wealthy knowledge to your loved ones. If you're curious about how smart employees turn every paycheck into equity, not expenses, that's exactly what I cover in the next video. See you there.